Ready to navigate the markets in 2025? If you're using a robo-advisor like Betterment, the answer is a resounding yes, and you're already ahead of the curve. But what exactly are the best strategies to make sure your Betterment portfolio is primed for the year ahead? 2025 has brought some notable shifts to Betterment's investment approach, and understanding them is key to maximizing your returns. They've made strategic adjustments to several of their core portfolios, with a slight increase in exposure to U.S. stocks and bonds. At the same time, they're reducing their exposure to international emerging markets and developed market bonds. For portfolios with a larger bond allocation, a significant change is an increased focus on U.S. short-term, high-grade corporate bonds. The thinking here is to capture higher yields without taking on too much long-term risk. Betterment has always been about making investing simple, but that doesn't mean you should be hands-off. The real power comes from using their technology to your advantage. For 2025, that means leaning into their automated features. Their system automatically rebalances your portfolio and reinvests dividends. This is crucial because it keeps you aligned with your target allocation and prevents you from having to manually adjust your holdings. But the real game changer is Betterment's tax-smart technology. Features like Tax Loss Harvesting Plus are especially valuable in 2025. This automated tool scours your portfolio for opportunities to sell losing investments and use those losses to offset capital gains and even a portion of your income, all while keeping your portfolio on track. This can significantly boost your after-tax returns, which, at the end of the day, is what truly matters. For those of you with a more adventurous side, Betterment's innovative technology portfolio is also getting an update. They're adding a new, actively managed ETF to the mix. This new fund doubles down on themes like AI and biotech while also increasing exposure to the broader information technology sector. It's a way to get targeted exposure to high-growth areas while still being within a diversified, managed portfolio. Whether you're sticking with the core portfolio, exploring socially responsible options, or diving into tech, remember the fundamentals, set your goals, choose your risk level, and let the technology do the heavy lifting. The key is to stay consistent with your deposits and trust the long-term strategy. Don't get caught up in chasing trends. The most successful investors are the ones who stay the course. With that said, thanks for watching and until next time.